Pull up the 1 week chart and you will see quite a considerable drop and then a little bit of a rebound towards the end. In trade yesterday, the stock was up as much as 3.7% after clarification that was sent out by the company to the exchanges about this whole World Bank ineligible list story. But there's also the earnings to talk about, and Anushi is joining in to tell you about some of that before we get the management in. Anushi, strong quarter in terms of execution and top line, but there was some pressure on the margins, correct?
Right. So what we are seeing is again execution in transmission and distribution has played out well for the company. Hence, we are looking at a more than a 43% or so of a growth in terms of whether top line is concerned. While if you look at the order inflows also, that has also remained on the stronger side. 66% is the kind of uptick that we are seeing for the quarter. Strong set of inflows is what we are seeing now. That target is about 9,000 crore plus of inflows. So how the second half would shape up is something that we should be watching out for as well. But the current book to bill, if we see based on the FY25 revenue, now that stands at about 2.8 times. So good revenue visibility is what we are seeing there as well. However, margins, as you correctly pointed out, there was some bit of pressure there, and this is on account of high subcontracting expenses. In fact, that was up over 3 times is what we are seeing compared to the last quarter. So what led to this particular spike is something that we should see. Apart from that, net debt stood at about 703 crore at the end of the quarter. So this is the overall picture that we have for Transrail right now.
Okay. Randeep Narang joining in. Thank you for that, Anushi. Randeep Narang is Managing Director and Chief Executive Officer of Transrail Lighting. Mr. Narang, the numbers look good, and I'm going to come to the numbers, but I'm going to start with this clarification because this literally seems to be a typo effect that has impacted your stock. The news was about TARIL, and I think Transrail Lighting got caught up in it. Am I understanding that correctly? That's what you've said in the clarification, that you have nothing to do with these World Bank orders and their debarment list?
Yes, ma'am, this is true. It is TARIL and we TLL. So this is Transformers and Rectifiers.
Yes.
And we have nothing to do with any kind of problem with World Bank. Yeah. So that was actually a misunderstanding, and we've clarified that yesterday.
Yeah, but the fact that your stock dropped because the street suddenly jumped to this it says a lot about how the markets function at some time. Let me come to your numbers, and the numbers are looking strong all round. Margins still seeing a bit of pressure. I wouldn't say pressure flat, but slightly mildly down. Why do you think this has happened?
Ma'am, actually, if you see our guidance, what we spoke in first quarter, we said we'll be between 11.5% to 12% this year. And we are at a level of 11.9. So it's very much in the planned zone. What you see is a marginal dip over last year, quarter 2. That is because we had some high margin projects which got finished last year, and we have now finished 1 or 2 legacy projects. So therefore, there is a margin, little drop versus last year. But if you see our H1 results, we are fairly much into the zone of 12%, 11.5 to 12 is what we said. So our margin guidance stands good for H1 and for the year.
I do want to ask about that top line growth though, Mr. Narang, and very good morning to you, Alex here. 40+% increase in the top line, and that seems to be on the back of strong execution. In that context, would you say that the full year guidance of 22 to 25% revenue growth is conservative?
Well, this question was asked in Q1 when we grew by 61%.
I remember asking it, sir. I'm asking it again.
So we are actually hopeful we'll do 25% plus. We are in that zone of H2 is always stronger than H1. So we are hopeful that we will beat our guidance of 25%.
Specifically on the margins, I know that you've clarified that this is within expected range, but it has been pointed out by my research team that the subcontracting expenses were 3.2x, which seems to have had some bearing on the margins. Why was there such an increase in the subcontracting cost?
So there have been almost 8 projects which we closed, and we were crashing these projects based on the customer timelines. Also, the revenue has grown by around 60%. So therefore, we have to actually execute faster and deliver. And that's a normal philosophy of execution cost, subcontractor cost going up, which is very much within our planned, let's say, revenue and cost plan. So we have nothing to worry about, and the margins are intact.
Mr. Narang, good morning, Neeraj here.
Yeah,
There are a couple of research notes which spoke about um, two factors which I thought I should get clarification from you from, because it'll help your investors as well.
Yeah.
Is unbilled revenue rising because of aggressive sales recognition, or you don't agree with the statement?
No, unbilled has risen because there are 2, 3 projects where the billing happens based on milestones, and the milestone happens in a month or 2 months' time. So therefore, as you are growing your revenue, there will be marginal increase in the unbilled also, which gets handled in the quarter.
Believe that while that number is rising, it will come off over a period of the next 1 or 2 quarters to near normalcy.
Absolutely. Within the next quarter, you will see improvement. It keeps on building, and we keep on billing based on the unbilled done.
Got it. The other question, Mr. Narang, is this, and you explained to us in the past how your business model is slightly different from some of your peers, and which is why you enjoy these higher margins, etc. You've just responded to the answer on margins as well. I'm wondering if you have given a formal guidance for FY26 or a view for FY27 or 28, and do you stick to that view, or do you up that view or lower that view in any fashion?
No, we are actually very focused and stable. Our margin profiles in the orders we book.
Not just margins, sir. I mean overall. Yeah.
I know that. So it's not about the order booking also. So the guidance was 11.5 to 12%. We maintain that for this year, and we are quite confident that we will do the same next year.
But yeah, again, I'm just sorry, just one repeat question on that. So that's on the margin front, but beyond that, the revenue front and the volumes front, is there a formal guidance that you've given? Do you stick by that at the end of the first half? That's my question.
So we are, as we mentioned last time, we are looking at a 20% to 25% revenue growth going forward next year too. This year, again, as I mentioned, 23 to 25% plus. So we stand by our guidance, and we are comfortable to achieve that.
What about your export targets, sir, with what's happening in the US, etc.? Just first want to get a sense if there has been a pain point on that front, and are you revising your export targets, or those are on track?
Actually, we are not really big in US. In fact, we're very marginal or negligible. Our focus is principally Africa. We are into Southeast Asia and SAARC. And therefore, our guidance remains. Our international order book, as you see, will also grow based on the H2 numbers. So US does not impact us in any way.
Just want to ask about the net debt picture. Am I right in understanding that it could rise to 800 to 900 crore by the end of March 2026? If so, why is that, and what's the trajectory you're expecting?
See, we are at 703 crores right now. And if you see, we were at around 613 earlier, last quarter. So principally, this is the capex expansion we are doing for our factories for brownfield and a greenfield plant. And almost 80% of the expenditure has happened. So we see that not going to the manner you are mentioning, but it will be a marginal increase.
Okay, Mr. Narang, thank you so much for speaking with us today, coming on NDTV Profit and talking about your numbers. Numbers looked strong. You saw that bump up, and also the clarification of the difference between TLL and TARIL. Thank you so much for speaking with us.
Pleasure to be here.